Hello, everyone, and welcome to Schwab Coaching. My name is Cameron May. I'm a Senior Manager of Trading and Derivatives Education here at Schwab, and this is Advanced Charting Techniques. And today we're talking about planning and scanning for trades using the Trend Value Momentum chart indicator system. So I'm really looking forward to this one. It's also known as the TVM system. To some of you longtime viewers of this show, it'll be a familiar system, but one thing that we've never done is performed a scan for stocks that have recent signals generated by the system. And for those that aren't familiar with TVM, I'll try to go at a pace that everybody can follow, but a lot to cover. Before we get to any of that, though, let me first of all say hello to everybody who's already chatting in out there in YouTube. Great to see so many familiar names, as it always is. Hello there, John and Sia, Posh and Kevin, Greg, RC, Ricebird, Vic, everybody else. Thanks for joining us week after week. We always do appreciate your attendance and your contributions to these discussions. If you're here for the very first time, I want to welcome you as well. And if you're watching on the YouTube archive after the show has concluded, enjoy the recording, but be aware that you're invited to join us in the live stream. If you'd like to be here, this is a Friday webcast series, and we kick things off promptly 1 o'clock Eastern time. We'd love to have you here in our live stream audience. And as a treat, as always, for our live stream audience members, my very good friend Mike Fairborn is joining us out there in the chats. He's going to be addressing any questions that I can't get to just during the flow of the presentation. Thanks for having my back there, Mike. And Mike and I would also like to issue an invitation to everybody watching. If you have an account on X, you should be following your favorite Schwab presenters there. It's really the very best place to connect with us in between the live streams. You can find Mike there on X at Mike Fairborn CS. You can find me there at Cameron May CS. Mike has already posted those in the chat. Thanks for doing that, Mike. But let's get into this discussion. We're going to be talking about this TVM set of chart studies. Talk about how they're built, how they might be used to plan and place a trade, and we're going to scan for stocks with that. Now, before we do that, of course, we need to consider the risks of these sorts of approaches to the markets. These disclosures are important because risk is real, so bear these in mind. The information here is for general informational purposes only and should not be considered an individualized recommendation or endorsement of any particular security, chart pattern, or investment strategy. Schwab does not recommend the use of technical analysis as a sole means of investment research, and investing involves risks, including a loss of principal. All right, so let's set the agenda for what we're going to cover in our time together today. Pardon me. First thing that we're going to do, since this is part of an ongoing series of webcasts about using charts for planning and placing trades, we're going to follow up on current positions. So we have two current positions. It'll only take a moment to review those. Then we're going to look at the S&P 500, but within the context of our now familiar Trend Value Momentum study set. But I thought, we've been looking at the S&P through that lens for months now. But we haven't actually planned and placed a trade using that set of studies in quite a while. I think it's been like 8 months. So we're going to revisit how the TVM set is built, and then we're going to use it to place a trade. But before we can place a trade, we have to find one. So I'm going to do a scan for recent signals from the TVM strategy set. So all of that to cover. Let's go right to the Thinkorswim charts, Thinkorswim paper money platform. And here are our two current positions. We have Amazon, we have SMCI. Amazon was last week's trade, and if you'll notice over here, it's not getting off to the greatest of starts. And as a matter of fact, this one's done. It's cooked, and we're going to close it up. And I'm going to show you why. Let's go back to the chart, and I'll show you last week's discussion. Who was it that was asking, how am I going to beat? Let's see who asked that. RC says, hi, Cameron, how will you top the price time filtering bar count indicator discussion that we had last week? Oh, I always try to raise the bar every week. I work hard to make each of these webcasts informative, educational, but sometimes some of these things just prove to be a little bit more popular than others, and this one really roared out of the gates, but the stock didn't. Video's doing great, but the stock is not. So in any case, this is just one of the things that can certainly happen when planning and placing trades, regardless of one's technical approach. Nothing carries a guarantee of performance on any individual position. So what we're seeing here, if you weren't here for last week's discussion, we used our price time filtering bar count indicator as a trend filter. And as long as these green histogram bars are rising, a trader would typically interpret that to be a continuation of a short-term bullish trend. And then we paired that with a short-term signal generator. In this case, it's the 20 exponential moving average, and we used a crossover system. Got a crossover last week, stock price popping up above that short-term indicator. At the same time, we had this short-term trend, so we took an entry. We placed a stop below recent lows, so that's sitting right here, waiting to sell those 20 shares that we purchased. However, we had a plan, and we put this note on the screen during the webcast. We're going to sell if we get a bearish 20 exponential moving average crossover. And look at that red arrow appearing, calling our attention to the fact that we do have price crossing down through the 20 EMA right now. So guess what? As of today, there's that signal. We're going to close this one out. It's a little lost, $88. But obviously, the trader prefers a better outcome, but that is, losses are just part of the part of what the trader needs to be prepared for. In any case, we're going to close this out. First thing I'm going to do here, I'm going to do it from the charts just to demonstrate that it can be done. Click on the stop. Let's cancel that order, and you'll notice there was a sell button right here to indicate that we had a stop in place. When I click the X on the little, what we call a pill on the chart, it deletes that order, because we don't want to stop out there on some shares that we no longer own. So that's been canceled. Now Mark says, good for you choosing to sell on a break of 20 exponential moving average. Keeping to your rules. Exactly right, Mark. Could I have made excuses maybe? Oh, we're so far above our stop. Maybe we'll just bend the rules here a little bit, give this trade a chance to prove itself, and maybe it'll recover and go higher. It certainly could. Now, that might lead to a profitable outcome. Might. But it would also lead to is a blurring of the lines, a blending up of the rules. And when a trader is out there making up the rules as they go, that's something that's difficult to have to replicate. Anyway, so let's close up this Amazon position. I'm going to right click. Let's create a closing order and just sell those 20 shares. That's going to take us to our trade tab. I'm going to sell this the market with the market order. With market orders, let me click confirm and send here. With market orders, prices can change quickly in fast market conditions. Just because we are seeing an $88 loss doesn't mean that's what we're actually going to lose. It could be more, because those fast market conditions can result in execution prices that can be different from the quotes displayed at order entry. But let's send this order off. No commission on this trade, but there can be on some types of trades. And we've sold 228.56. That trade is concluded. Let's go look at our other one. So with SMCI, we own 100 shares. Bought those at $43.98. They're doing okay right now. It's been a bit of a roller coaster ride for this one. So if we want to revisit the logic of this one, let's go to this trade. And in this case, if we go up to our studies, let's load up our SMCI study set, which was, this is a trade based on a market forecast cluster. Now, if you missed this discussion, this is a good reminder. If you haven't subscribed to our Trader Talks channel just yet, make sure that you've done that. You can go down in the lower right-hand corner, click on the subscribe button, or click on the subscribe below the video stream. It doesn't cost anything to subscribe to our channel. It only takes a second, but this is where we house all of our previous webcasts. So the full name of the channel is Trader Talks Schwab Coaching Webcasts. You can just look this up on YouTube, go to the playlists, and then about halfway down the page, right there on the left is our Advanced Charting Techniques series. And I can click on View Full Playlists. And then I could go back through and I could actually see the logic of each of these trades that we have placed. So for example, that price time filtering bar count trade that we placed, that we just finished up, was entered last week. And it is only found on Thinkorswim. It is a Thinkorswim exclusive indicator. And this video right here from last week is the only video that ever discussed that indicator. You might want to check that one out. Now, Greg says the cluster indicator is quite interesting. And right here is where we discussed that cluster from the market forecast tool. Anyway, so let's go back here. Now that we know where to go find those previous webcasts where we can see the logic of these trades, We spotted a cluster on Supermicro a couple of weeks ago. That was right here. The stock also seemed to be right near an area of support, so we took an entry on the combination of that technical evidence with the objective that maybe we're going to get another one of these big runs like we've seen following previous clusters. A big run here, a big run here, a big run here. But as with most of those previous clusters, the cluster didn't actually appear right at the moment of reversal of price. You'll notice this one was a couple of days early. This one was about a week early. This one was about a week and a half early. So we allowed for some wiggle room to the downside in case we turned out to be a little bit early on this signal. And guess what? That seems to have been the case. It's pulled down a little bit further, down to the previous support level, but now it seems to be advancing. Interestingly, and somebody called this out last week, is that we saw a couple of subsequent clusters right through there, where all three of our oscillating lines were below 20 at the same time again. So we might just throw in an extra, let's do this, right there, to kind of call out the point that we did get another short series of clusters right there. And now the stock really seems to be moving. We'll see if that continues. But for right now, we have an order to take us out if we get up there and capture profits, an order to sell at market if we drop down to a stop level. And just as always, stop is not a guarantee that we'll sell at exact price. Jatine says, hi, I'm still confused. Let's see. Moving X give signal for entry. However, price time, referring to last week's trade, shows a bearish trend as a good wait to turn green. Okay, so Jatine, just to quickly summarize, yes, to say yes to your question, the typical interpretation when planning and placing a bullish trade on that price time filtering bar count indicator is the trader first waits for the histogram to turn to green. Then they look for signals. They look for their preferred short-term signals on their chart. So yeah, okay. Anyway, so there are two trades. One we closed up. The other one we're going to allow to continue to work. But let's plan a new trade, and we're going to be doing this trade using our TVM chart trading system. So this is the trend value momentum trading system. Let me do a quick poll here. Now, Life Student says SMCI. Yeah, that was just a stock. Did you have a question about that? Apologies, but if I want to ask you a question. Are you familiar? Let's go up here and switch our study set. Let's load up our TVM strategy set. There we go. How many of you are kind of long timers and you were here that 8 months ago when we first discussed the trend value momentum study set? Just a quick yes or no, because I know that I bring it up each week and we do kind of a brief recap of this system. But I just want to get a gauge of how many of you are really familiar with this. Now, I'm going to speak to that larger audience that's going to watch this after the live stream is concluded. Most people watch this on the recording. I want to make sure that everybody knows how this is constructed. So I'm seeing some no's coming in. Okay. All right. Ocean Life was here. Art Bandalay was here. Yes, but mostly no's. Okay. All right. So let's get some quick context. I'll talk about how this system is built in just a moment, but a typical interpretation is we have a trend indicator up here. That's a T in our TVM. We have a value indicator right here. The RSI is the V in this indicator system. And the M, momentum, is represented by the MACD histogram. So our trader typically looks for a confirmation of trend, a short-term confirmation of value, and a short-term confirmation of momentum. So trend, we typically look for the 50 triangular moving average to be above the 100. In this case, it is. And so that would be interpreted typically for users of this strategy set. That would be an indication that trend looks good. Okay, so within the trend, is there apparent short-term value, and what's momentum doing? Well, value has been rising, and on the S&P 500 at least, we may be approaching the overbought territory. And that might be a time when some traders are a little bit hesitant to take on great big new bullish positions. Maybe they scale back on new bullish positions or just wait overall for those until we see stronger indications of value, at least in this case represented by a lower RSI. But if I just bottom line this, though, is this a bad thing that RSI has been rising looking through the traditional lens? No, that would typically be seen as just a bullish confirmation. Now, finally, our MACD histogram has recently turned green, which is also historically seen as being bullish. But a typical, let's say, fresher signal is when we get bright red turning to dark red. So that actually happened about a week and a half ago. I know you have to kind of squint. Let me zoom in here a little bit. Bright red shifted to dark red back here in early part of September. We're now in mid-September, but that might have been signaling that prices are starting to gain a little bit of strength. And you can see the S&P has cooperated since then. It's not because that signal turned to bullish, but the signal was making, well, in trader speak, it's sort of an educated guess here that price might be starting to gain a little bit of a tailwind there. Anyway, so we have trend, we have value, and we have momentum. If I were to just use this to get some context of what the conditions seem to be from a charting perspective for a bullish trader right now, trend looks bullish. RSI looks bullish, although maybe starting to get a little bit overbought. And MACD has shifted. Well, it's been bullish for now about a week. So still bullish, bullish, bullish. Not necessarily a time for a trader of this system to be bearish, maybe a little bit more cautiously bullish. But I did want to talk about how this system is constructed. Then we're going to use it to plan and place a new trade using stocks, and maybe something with a little bit fresher signals, right? So let's sort of break this apart. We'll talk about the triangular moving averages first. Now, one thing I want to point out is sort of the physical appearance of these moving averages. They're going to look very different from a typical exponential or a simple moving average. A triangular moving average is very smooth. You'll notice they tend to change direction very gradually. Final Approach says, why can't we search the playlist in your channel anymore? You can. So all you have to do, and here's what may have happened. This is a good point. From here, rather than searching up here, just make sure that you're starting from the channel homepage. Do your searches from there. So for example, if I wanted to look for TVM, this is still going to scan through my playlist and the other coaches' playlists. But if I type in TVM, there we go. There's that last trend value momentum chart trading system discussion, which was 8 months ago, right? But if we were to conduct that same search, if I've already gone into a playlist as an example, it would actually look through all of YouTube. All right, anyway, let's go back here. Hey, and you know what? Actually, as we have been taking a look at this trend trading system, I've got to say hello there. Ben Watson just chatted in to say that he's here joining us from the Washington, D.C. workshop. Great to see everybody out there in Washington, D.C. You guys have some fantastic presenters out there. If you didn't know this, Ben Watson and I have actually been working together for more than 20 years. So hello to Ben. Say hi there to the rest of the crew. I believe Kevin's out there with you. Scott and Ray, hello there, guys. Everybody watching, they're out there in Washington, D.C. You're in for a treat. Enjoy that discussion with Ben and crew. What we're talking about here today in this webcast is something known as the trend value momentum system, used for planning trades on a stock chart. So we were just discussing getting some context on the S&P 500 using the TVM system. But I wanted to break down where these moving averages come from. So we're using something known as a triangular moving average, also commonly known as a double smoothed moving average. This is going to be something new for probably most people watching this. With a typical moving average, if we're talking about just let's say a simple moving average, how about we bring that up here? I'm going to go up here to our little edit studies icon. Let's hide the two triangular moving averages, let's abbreviate that to TMA. I'm going to apply that. So I just hid those moving averages. Let's add a simple moving average because a triangular moving average is built upon a simple. So let me add a simple. I'm going to customize that to be a 50-period simple moving average and click OK. Click Apply, click OK again. So we should be here in familiar territory with an SMA on the S&P 500. Well, most of those watching know that a simple moving average is calculated. Its current value is generated by taking the closing value of the S&P for the selected time frame. You just saw me select 50 days. So over the last 50 days, the average closing value of the S&P 500 is 6385.54. And then that value just changes over time. For example, the average closing value of the 50 days preceding, and I've just sort of moved my cursor here randomly to May 21st. Well, prices were lower back then. So average prices were lower back then. And so the average for the S&P was about 55.80. So it's that change in average values that generates our simple moving average. Well, for a user of a triangular moving average, there's a common complaint among those that shift to a triangular moving average over a simple moving average, and that is moving averages tend to be inherently kind of jittery. Even though they're an average, they can still be a little bit too responsive to changes in price. So to smooth that out, and this is the double smoothing element of a triangular moving average, instead of using the closing value of the S&P 500 each day, the triangular moving average uses the ending value of the simple moving average. So here's what I'm talking about. This is how the triangular is calculated. If I zoom in just a little bit and we get a close look at yesterday's close on the S&P 500 was 65.8747. I can see that right up here in the upper left-hand corner, 65.8747. And that's used in combination with the other 49 closing values to generate the simple moving average. Well, instead of doing that, the triangular moving average actually looks at the value of the simple moving average from yesterday, which was 63.7826, and it uses each of those values each day and gets a 50-day moving average of that. So it double smooths. That's why you'll see that the triangular moving average tends to be slower and smoother than the simple moving average. Now, for better or for worse, I'm not saying that it's a superior moving average, but it does tend to be smoother. All right, so that's it. So that's how it's constructed. Let's go back to our studies. Actually, let's go up here to our edit studies, and let's remove that simple and add our two triangulars back on there. Click Apply, click OK. And talk about how trend might be confirmed. So here's something, let's map this out. With the TVM system, the trader is looking for 3 confirmations when planning a bullish trade. Dragon Rider, have you ever heard of that double smooth before? Well, now you have. Okay, so our trend in our TVM, our trend confirmation, is the 50 TMA being above the 100 TMA. That's it. And so these are added just like you'd add any other study. You just go up here, type in triangular, select that, add it to the chart, and then customize it to your preferred time frame, right? So we typically look for the 50 period being above the 100 period. In other words, the shorter term moving average is rising above the 100 term, the longer term moving average. Confirmation of trend, at least in the eyes of some technical traders, those that use this sort of an approach. So next up, even within a confirmed bullish trend, there can be, at least conceptually, better or worse times to take on new trades. Within a nice upward trend, are we looking to buy at short-term highs or buy at short-term lows? When things are overvalued or when things are undervalued in the short term? Probably, conceptually, when values are a little bit lower, right? Trying to buy in at those low points. Well, RSI is sometimes used as a short-term indication of value. So our value confirmation is an RSI rising from below 40. Here's what I'm talking about. Let me put a space in here just because that's bothering me. There we go. Anyway, let me hide this for just a moment. So with our RSI indicator, it is an oscillator that is range bound. It can go as high as 100. It can go as low as 0. But traditionally, and I've already customized this, that's sort of cheating. So I need to go up here to our Edit Studies icon. I did this the last time I taught this webcast in good detail, and then we just saved it to our study set. So let's edit this so it looks more traditional. The oversold area is typically 30 or below. Let me click OK and click Apply. So we've just moved this lower line down here. But basically, we have an oscillating line. That's our RSI line, this one that's rising and falling. And then we have overbought above 70. We have oversold below 30. And so what some traders will do is they'll look for a condition where price seems to be rising, and maybe that's defined by the 50 TMA being above the 100. And at the same time, looking for an indication of short-term value where RSI has dropped low into an oversold range. The difficulty here is that RSI in a strong upward trend hardly ever goes below 30. So if we're waiting for 30, the trend almost has to reverse before we can get there. So one customization of this indicator that is commonly done is to raise that oversold range. Since 30 almost never happens, but we're still looking for those short-term value indications, let's come up here and not be quite so demanding of that oversold. So I'm going to go here to the edit again, and let's change this back to 40. Still on the low end of things with the traditional interpretation of RSI, but you can see we'll get some more examples of RSI dipping down below 40 than we'll see with 30. All right. It allows for more entry points. It's still, in very strong market conditions, can be relatively rare, and that's why it can be helpful to have a scan, which we're going to be doing in a few minutes. So if we have trend confirmed with the 50 being above the 100 on the TMAs, if we have value confirmed with our RSI dipping below 40, and actually a typical interpretation of value is that sometimes RSI can go below 40 and then can keep going down for a while. We saw that right here. We also saw it right here. Just getting below 40 may not be enough. So commonly the trader will look for RSI to slip below 40 and then to come back up above 40. So that's why I put here in our confirmation, not just being below 40, but rising up through 40. All right, so we have our trend confirmation, we have our value confirmation. How about I give a little space here, just so it makes it a little bit easier for us to read that. Finally, we have our momentum. And for that, in this system, we use the MACD histogram. Now, yes, it would probably be just as serviceable if we were to go up here and add the MACD to our chart. If I chose MACD 2 lines, that's just really, it's exactly the same information, just displayed differently. So I don't want to offend the viewers who use the MACD 2 lines in place of the histogram. It's basically the same information, just displayed differently. But we're going to be using the histogram for today's discussion. And when we've applied that to our chart, a trader here commonly interprets this as indications of short-term momentum. Do the buyers hold momentum or do the sellers hold momentum in the short term? And so when we see the oscillator dip down, that histogram line dip into red, and that red lengthening, a typical interpretation of that is the sellers have the momentum and they're increasing their momentum. Now, if there's a reversal of that, I call this a redshift because I just borrow this phrase from astronomy. But when we see the bright red shift to dark red, to some traders, that can be a very early sign of a subtle but significant shift in the momentum. The sellers they still have the control of the momentum, just they're losing their grip a little bit. Maybe a little bit of a shift toward buying momentum. So finally, the final confirmation here would be the MACD, what I would call, this is my term. Sorry, you're not going to see this anywhere else. I call it a redshift. Those of you who are kind of fans of physics or astronomy, you know that can be an indication of how distant a star is, kind of nerd speak. Anyway, but to me, it applies here, so I'm going to use it. So that's basically our TVM system. Trend confirmation, 50 above the 100. Value confirmation, the RSI has dipped below 40, but starting to rise. It was oversold, starting to make its way toward overbought. And the momentum confirmation is the MACD. The sellers have had momentum, but losing their grip. The buyers starting to seize control back. Those are the concepts there. So how do we find that sort of combination of factors? Because it can be comparatively rare. Okay, no, maybe that's better. Yeah, more like whether the star is coming to or going away. It provides that sort of an insight. Yep, yeah. Anyway, let's go conduct a scan for these signals. So I'm going to go to the scan tool, but I'm going to be performing a study filter scan, which is only available on the live platform. So I've opened up a paper money platform here, but a live platform here. And when I do that, I like to make sure that I know which is which. Now, obviously, paper money, there's a little reminder up in the upper left at all times that tells us that we're in a simulated trading environment. But I just changed the color scheme on the live platform so I can see, okay, the black one is live. The white one is paper money. That way I don't accidentally place a live trade when I'm thinking I'm doing practice trading. Anyway, so let's go up here to our scan tab. And I've just reset things. So we're starting from a nice blank slate here. And I don't really need any of these default stock filters. So I'm just going to close those out to construct the scan that we're going to be doing. However, I am going to direct this example scan just to stocks in the S&P 500. So we're going to scan in just the S&P. And we're going to be looking for our three indicators: trend, value, and momentum. So we're going to add 3 study or technical filters. Go. So let's start building this first one. We're going to go up here, edit the first one. It's always going to default to alphabetically. ADX crossover is the very first technical study filter. So it doesn't know what we want, so it just starts at the top. We don't need that. So let's just delete that. And we're going to add a condition for the triangular moving averages. So I kind of skipped ahead here. In the menu, we'll choose study because this is a study filter that we're applying. Let's type in triangular for moving average triangular. And our requirement here is that our 50 is greater than the study. Type in triangular again, moving average triangular. We want our 50 greater than the 100, and we want that to be happening right now, today. That's within one price bar. So specifically, the way that we built this particular study filter is that 50 has to be above the 100 as of this moment. Okay, we're going to save that. Now, let's go filter the next one. So our moving average triangular 50 is greater than the moving average triangular 100. Next up is that's our trend. Let's go on to value, which is our RSI. So let's click the edit. Let's delete the ADX crossover. Let's add a condition. And for our study, RSI. So with our RSI, we're just going to leave the defaults in here. but we want a crossing above 40 recently. How do we do that? Crosses above. Well, 40 is a value rather than a study. So here we can put in that specific value. And let's say we want it crossing above the 40 very recently, not necessarily today, but let's say within the last few days. If we're using a daily chart, that's the last 3 bars, in other words. There we go. So we'll just click Save. So the RSI crossing above 40 within the last 3 bars, we'll click OK. Now we're down to our momentum indicator. That's going to be our MACD histogram. So I'm going to click on Edit. Let's remove the ADX from this one. Let's add a condition for a study of the MACD histogram. And in this case, we're going to be fairly straightforward. The RSI is going to assist the MACD in already being low, but let's just make sure that our MACD is less than a value 0. What's that telling us? At the very least, we're seeing bright red. Maybe it's dark red, but at the very least, it's a red MACD histogram. All right, and we're going to require that as of this moment. So let's click Save. So our MACD histogram is less than 0. So now, I wonder how many companies within the S&P 500 currently have a 50 triangular moving average above the 100, recently have an RSI crossing above 40, and right now have a MACD histogram that's down below 0, maybe turning to a darker red. Let's click Scan, see what we get. Okay, so it looks like we have 29 out of 500. I said this is a relatively unusual signal. Out of 500, only 29 S&P 500 companies have this. So now we could save this scan if we wanted to. We can come up here and, save that scan query right there. I'm not going to do that, but we could do that. But how about we use a couple of these first stocks? Should we look at T-Mobile? That's probably going to wind up being our trade example for the day. Let's see if it just matches everything. Okay, so here's T-Mobile. First of all, what's going on with trend? Some might, if we were doing a manual analysis of this and we were looking at highs and lows, it looks like we had a period of lower highs and lower lows through here. Interestingly, recently, those highs and lows have started moving higher, and this has done a pretty good job of spotting a little bit of a trend shift. And now the bottom line, though, is the 50 above the 100? It is. I think it's also interesting that price is hovering right along that 100. Pretty good combination of technical factors pointing toward bullishness. None of these are a guarantee of bullishness, though. But trend confirmed. What about our indication of value? A lot of stocks out there with the S&P trading up at all-time highs, where the RSI is going to be up at the oversold condition, not T-Mobile. This is actually very recently dipped down below 40. And what is its current value? Wow, couldn't get any closer than that. If I point at the RSI and I look up here at the current value of the RSI, it's at 40.003. That's 3 1,000ths of a point above 40. I don't know if I could get fresher than that. Yeah, we're going to do this as our trade. What do we see also on our MACD? It is below 0, just starting to turn red. Yeah. Zink says T-Mobile looks like a range. Now, is that a bad thing with this trade system? Not necessarily. This is commonly used as a short-term trade system. So our entry signals are check, check, check. Where do we take exits? Where might the trader plan to take profits? Well, there are a couple of common approaches. Number one is if we've gone to oversold for RSI, sometimes the trader waits for an overbought condition to take profits. So that might be up around here. Now, another way is that with RSI and MACD both being low, that's typically a result of price coming down from recent highs. And so the target might just be a return to previous highs. And so let's say that looks like that's around 260. I'm going to do a little bit of rounding here for convenience purposes. Let's say that our target is 260. All right, that's if the trade goes well. There's every possibility that this trade might not pan out. So where do we place stops? Well, as with so many trade systems, if the entry turns out to be early, maybe the trader pulls the plug if we start to break down below recent support levels. Now, this is kind of convenient. We have a number of arguments that could be made for support. Could be that moving average right at 100, that 100 TMA. It might just be recent lows, which I will say are probably more common for this signal or for this system. So what is our recent low? We have a couple of candles here that got pretty low. The low from a few days ago was 237.40. The low that was from a week ago. Low from a few days ago was 238.50. So this one's a little bit lower, 237.40. And our moving average is kind of in the middle. I'm going to go to the low from a week ago. Recent lows, 237.40. And let's give it, maybe a percentage point or two, maybe $1 or $2 below that. How about let's go 1% below that recent low, 237.40 minus about $2.40 is going to have us with a stop down there about 235. That's going to be right down here. Okay. How about we draw in a line right around 235? You can see this is not going to provide a ton of wiggle room. The trader, if they feel like they need more space, and if they feel like they're justified with the reward potential, maybe they can take a larger per share risk. They might nudge that lower, but that's going to be our example here. Let's buy some shares with a plan to exit at 260 or stop down at 235. Let's go to our trade tab, right click on our ask price. Let's put in a custom buy order with an OCO bracket. And we typically spend about $5,000 on each trade here. How about let's do maybe 25 shares. No, actually, yeah, that'll be fine. Let's do 25 shares. We'll click on the chain link to link those together. I'm going to put this order in as a market order with a plan to take profits. Our limit will be up there at 260. Our stop will be down there at what did we say? 235? Go. We want to make sure both of those sell orders are good till canceled. All right, so let's place that trade. Let's click confirm and send. Buying 25 shares. Just check that. That is not correct. There's something I'm doing wrong here. Hold on a second. I don't have that linked. That's exactly the issue. There we go. Some of you are probably chatting in saying, Cameron, you're on the wrong stock. Let's make sure that we're linked to the charts so we don't repeat that mistake in the future. Right click. It's such a similar price. I didn't even catch that. Anyway, OCO bracket, market order, target at 260. Have our stop at 235 until canceled. Confirm and send. Buying 25 shares, one final customization. There we go. Buying 25 shares of TMUS, the market price with market orders. Prices can change quickly in fast market conditions, resulting in execution prices that can be different from quotes displayed at order entry. Might pay a different price than what we're seeing right now. With stop orders, there's no guarantee the execution price will be equal to or near the activation price. So we're not guaranteed $235 if we're stopped. There's no commission on this trade, but there can be on some types of trades. And we just bought those shares at 241.51. And those orders are in place, waiting to see what happens from here. But guys, we've accomplished what we set out to do today. I wanted to plan and scan for trades using the TVM trade system. So I hope you enjoyed that discussion. This is what we do on Fridays. We explore different ways that a trader might use charts to plan and place trades. I'm going to go let you enjoy your weekend, but I also want to make sure that you're aware of the resources you have from Schwab Education. First of all, make sure that you're subscribed to our Trader Talks channel. If you haven't done that yet, go down and click on the subscribe button. It only takes a second, doesn't cost anything, but this is where we house our playlists for our previous webcasts. So you can find the playlist here. You can join the live streams here. And of course, you can also search for topics of particular interest. I'd also suggest that you follow Mike and me on X at Mike Fairborn CS. You can find me on X at Cameron May CS. Best place to connect with us in between these live streams is on X. If you reply to one of my posts, I try to reply right back to you. All right, everybody, go have a great weekend. I will see you next week. I'll also look for an X. Mike, thanks for helping out. But everybody, whenever I see you again, until that moment arrives, I want to wish you the very best of luck. Happy trading. Bye-bye.